All right. So apparently we're live on both YouTube and Facebook as of now. So, um, all right, cool. We'll wait for people to come in,
Yep.
see how it goes. But I mean, this damn go-to, like, it went down from 150. If you look at the I don't know if you looked at this much, but look at this thing. It was up 150
Yeah.
back in February, and it's just imagine getting caught in this drop, like,
Yeah.
and then getting caught.
Why to go to an amusement park? You could just own this.
I know. Totally crazy. So I don't know. Normally I don't bag hold or whatever, but like on this one, I don't know. I just feel like it's got the range that it could bounce and at least minimize my loss. So I'm
Right.
trying to stay hopeful on it,
Yeah.
at least. Which I'm just glad that it's stuck to the usual. I didn't go hard on any of these, so to make sure.
Right.
Like if it's good earnings and there's some sort of something comes out about these Chinese companies, this thing could fill the gap. It's not ridiculous. There's a lot of
Yeah.
people shorting it, so it's not out of the question. So fingers crossed.
There's a lot more volume today, right?
Yeah,
That last blue
yeah.
bar has.
After hours, there was like $4 million worth of stock bought by somebody on the dark pools or something.
Mm.
So no idea how that's going to affect it, but there was huge volume after hours, so we'll see.
Mm.
Well, yeah, drinking my coffee again. Keep
Also,
myself.
with these Chinese companies, who knows if the accounting methods are correct or not? They might say their earnings were better than they actually were. So it
That's
might
what
shoot
I'm
up, and
worried about.
then you never know. A few weeks later, there could be more studies done on their actual earnings, and then who knows what will happen.
Right. That's what I'm worried about. Is there's a lot of fraud goes on, and it could be good, right? If nobody realizes straight off the bat, or it could be horrendous if everybody knows
Right.
and it
We should
tanks.
look.
So
We should look at earnings reports when it hit 180. There's a good chance they were probably really good earnings.
right. Hey Raj, how's it going? Um, I'm gonna try and reply to comments on voice because on Facebook you don't get my replies of it if you're watching on Facebook. Looks like you guys are on YouTube though, so you'll get any replies that we type in on YouTube. But if you're on Facebook watching, you're not going to be able to get a reply. Stupid StreamYard won't let me do it. So I'll try and we'll both try and answer questions on audio like this. So
Right.
anyway, let's just get started. So today, basically, I wanted to talk with Lance about trying to rescue this horrendous trade. I mean, horrendous is kind of an exaggeration. It's a small portion of my portfolio, but it's the biggest percentage loss that I've seen for probably 5 or 6 years. So it's on this stock, GOTU. So I think Raj got stuck in this as well. We were taking positions up around the
Yeah.
$10 range. Actually, I think more like up here, in this kind of range, betting that the stock wouldn't fall to below 7.5 anytime soon. And of course, being unlucky, the one in 30 trades that I've done recently, this thing dropped in a single day all the way down to, I think it bottomed out about 2.5 here, right? So from 11 or 12 to 2.5, what's that, like 85% of its value in pretty much one day. So there's no stop losses here, right? Unless you're smart and somehow manage to set your stop loss pre-market or after hours or something, which I've never managed to do on something like this. Like I say, this is a black swan event for me. Rarely get caught in something like this. So I was stuck. I actually got assigned the shares, and ended up holding shares at 7.5, and then averaged down because it was a nice small position. So I averaged down with like another few hundred shares, 900 shares, something. Brought my average down to 4, which I'm pretty happy with, relatively speaking, right? So you can see my position on the right at the moment. This is the stock that I'm holding. I have 1,100 shares. Average price is at 4 roughly, and I was down about $2,000 at the most, when it was at its lowest. But today it recovered quite a bit. I'll just quickly show you the 1 minute chart here. Let's see. So today it had this really nice run up, and got me back up to 12 or 1300 in the red, which after seeing 2000 is pretty nice. So I'm hoping this continues up. However, it got me thinking, and it got me talking to Lance about ways to try and mitigate any downside to this trade or to maximize any upside using what he is pretty much an expert at, which is selling these calls. So I asked him a few days ago, and he convinced me that it would be a good idea. Hopefully, he's right to sell a bunch of calls on this thing, which I think you've got on your presentation, right?
Yes.
So maybe we switch to that. You kind of put a summary of what I've got, right? So I've
Right.
got the 1,000 odd shares of stock, but I've also got 9 contracts, call contracts for September 17th as
Right.
well, with a strike price of $4, which is the same as my average on the shares.
Do you want to talk
So
about how you got your average to 4? Because you said you got most of them at 7.5.
yeah, well, so
You bought some
luckily
lower, right?
yeah, luckily I only had a really small CSP or put position, right? So I only had 200 shares as controlling 200 shares. So when it dropped, yeah, I was at 7.5, but that was such a small amount of money. I was like, you know what? I'm just going to put in another $1,000 worth or whatever. 3,000 bucks worth. Bring it down to 4. Looking at the daily chart, I was pretty hopeful. I'll put it on the daily. I was pretty hopeful that if I brought my average down to 4, that this is like the 4 level here. So within a couple of days, it was starting to recover. I was like, you know what? There's a chance this thing could have a bit more of a bounce. Like this was a ridiculous sell-off, right? I mean, often
Yeah.
we get bounced. It did, but it didn't go high enough that what I wanted, right? So I'm still holding. It's formed what I'm hoping is a double bottom around here, 2.4, maybe optimistically. And this is my stop loss. I think I'm not going to let this thing trend down for months because it could, right? This whole thing was
Right.
triggered by these regulations for China stocks, right? So a lot of the other ones had the same move. So it's still up in the air. If something dramatic happens, like they release the regulations and they go, "Oh, we're just kidding," really, maybe some of these foreign investors can still get into these stocks or whatever. We overreacted. Sorry. This thing could actually squeeze pretty hard, and the upside is pretty large, right? I mean, we could fill the gap. I mean, if something exciting happens, we could fill the gap to 8 or 10 or something like that. That's on the really optimistic side, though, and I
Yes.
don't really expect it to happen. But so in the meantime, I'm trying to at least get out of this thing, break even, or at least reduce this loss to something that doesn't wipe out a whole bunch of my recent smaller gains. So yeah, so that's kind of my thoughts on it. So I think switching to some of the reasoning behind the selling the calls, right? So
Yes.
so I spoke to you probably, what it was a few days ago, right? I was like, lads,
Yeah.
help, I need some sort of help here.
Yeah.
To try and like, what can I do? So my idea was to try and sell some calls and at least get some income from those, right? So to get the
Right.
premium, hoping that this thing at least goes sideways and doesn't continue to tank. So I've got those calls. I can pull them up actually. The sold calls. So here's the big mess that I have of GOTU. You can see some of these, like this is 5 calls that have sold, down $38 at the moment because the price has risen on it. And then I added 4 more down here. So again, I'm taking small losses on these things at the moment, but it's minuscule compared to the loss that I'm suffering on the stock. So
Right.
I'm trying to use this as an opportunity to learn because I'm completely new to selling calls. So I'm trying to just use this as a learning experience. At least that's what I'm telling myself, right? Try
Yeah.
and get something positive out of it. So the big question is, hang on, Raj is asking questions. This term you use fill the gap. How often does that tend to happen? If it does, how high would the stock go? Well, that's what I mean by gap, right? So the hope is, and it does happen if you're lucky, is the gap would be to here, right? So you've had this huge sell-off, and the next resistance after about this level, which we actually broke after hours. I think we're at the well, no, we're not quite there yet. But if it can break this line here in technical terms, you could see this whole move. Like there's nothing. This is a gap, right? There's nothing stopping this thing from squeezing all the way up to here. So $10, does happen. With this though, it's who knows? Like if who knows? There's earnings on this stock tomorrow too. So if they release a whole bunch of fake earnings and people fall for it, this
Yeah.
thing might squeeze. If they release some forward-looking statements, for example, where they say, oh, the regulators are just kind of being too rough. I think this will change. Optimism might come in again. We may see a squeeze because there's a lot of shorts on this thing. A lot of
Mhm.
people assuming that it's going to be delisted and like all sorts of stuff like that. So we really, really don't know. But that would be amazing if we wake up tomorrow and it's gapping up and rallying up and filling
Right.
this gap. So but we want to protect ourselves in the likely case that it doesn't actually happen.
Right.
So Raj is saying he wishes he's averaged down as well. I don't know if you do, man. Like this thing has just as much chance of keeping going down. um, so it was just my choice. It might be wrong. This thing might tank on earnings tomorrow. So I know, just take a
It's
loss
a
on
tough, it's a tough call to average down or not. Do it sometimes, but you got to be careful not to overweight it and go much higher percent than you're comfortable with for a position. Maybe
Yeah,
going a little overweight just to average down to maybe get out of the position, hopefully a little bit earlier is okay. But just be careful not going way overboard on the overweighting.
right.
'Cause
I
then,
know I am overweight. This is a small account, so I have
yeah.
multiple accounts. This is a small account, so this is overweight for that account. I think there's about 10,000 in here, so I'm in with
Mhm.
4,000. This is a gamble on this account, but it's a small portion of my total amount of capital that I have for trading with. So I'm
Mhm.
not I'm not I'm going to be able to pay the bills this month if this thing goes to zero.
Right. Yeah.
um,
That's a good point
so
to consider that too. Yeah.
Right. So it's a small account, but it's also like I'm not nervous about it. $4,000 position doesn't freak me out particularly. So although the emails that I sent out in the messages pretend that my account's completely smashed to pieces might say the
Right.
clickbait emails, quick save Russell's account, it's going to nothing. Um, all right, so why don't we get into the covered call stuff, Lance? So
Okay.
you have got a few slides. You want me to stop sharing my screen so we can
Yeah,
start
if you
talking?
don't mind, I'm about to share mine.
Right. I'll remove mine. So yeah.
See if
All
this
right.
pops up. All right. Do you see go to option repair strategy?
That's right. Yep. A repair
Okay.
strategy. So
Yeah, so this
hopefully
is
this
a
is.
it's a
Yep.
common connotation that a lot of people say is to repair a position where it doesn't go your way if it's much lower than where maybe you did a cash secured put and it's a lot lower than what that price was. These are some ways to help repair that particular position. One way you actually did it without even possibly realizing it by averaging down, and that's always one way to lower that general cost basis, which we're going to talk a lot about here. Um, so let's look at some of the covered call side. This is what you have currently. You have 1,100 shares. So the average price of all of the shares was $4. So you had a small position around 750, right, where the cash secured put was. Um, just quick question: you actually sold the cash secured put at 750, or did you buy the shares here?
So when it was about $12, I sold a put with a strike price of 7.5, thinking it was,
Okay.
oh, I'm safe. I've got a huge margin. I'm definitely going to collect the
Uh-huh.
premium on this, and then boom. So yeah.
Yeah. I mean, that's how typically you do pretty well. High IV positions go way out of the money and just collect those premiums, keep doing it over and over. Unfortunately, these situations do happen from time to time. Some of the final numbers are a little different because you actually collected premium. Do you happen to know how much you collected on the cash secured puts for the 7.5?
No, I didn't check.
Okay, so it's going to
Not,
be a little bit better than what these slides even show. So that's a good little bonus there. So I said, so you start with 200 shares, 7.5 cash your put side, and then you average down the total share price by buying 900 shares, and those are
yeah,
obviously under four because the
two something.
average of the 1,100 was about $4, right?
Yeah, yeah,
Okay. So plan so far of what you actually started with was to sell covered calls, try to receive some income while you're hopefully waiting for that jump back up. Right. So what you did before we even talked, where you sold 5 covered calls, that was a 4 strike price. I'll just say
yeah.
why it's a good job a little bit later, and you receive $14 per covered call position. So 14 times 5 is what 56, 50.
108, right? I think it was, or
Right.
something.
So you made some income here, and then you sold 4 more covered calls, pretty much the same price again.
Right.
That makes 9 total covered calls. You own 1,100 shares. So right now you have 200 shares of no covered calls. And we'll look at a strategy you could look at possibly tomorrow. You might want to wait until after earnings and see what the share price does. I would probably at this point prefer to wait a day just to see what happens with the earnings. But
Yeah.
you might be able to receive a little bit of extra income with these 200 shares. Okay.
Mm-hmm.
All right. So current price I think was around 288. I don't know after earnings it might be a little higher, closer to 3 or so. So what I do in these situations, whenever you sell a cash secured put, it goes way below that price, is you want to look at what your cost basis is. Okay?
Right.
Just looking at where your price is, if you bought at 4 and the current share price is $2.88, if you subtract those, you're at a loss of 1.12 per
Per
share,
share.
right?
Mm-hmm.
However, you already received some income from those covered calls. You
Right.
got $108 so far, right?
Right.
That's money in your pocket. By the way, you get this income immediately. You could go out to a nice dinner if you want with that money. You can do whatever you want with that. Okay, it's money in your pocket, and that's also a good way to think about it. You don't have to wait a few weeks to collect this money from the covered calls. You get it the second you actually fill that position. Okay.
Right.
So what we want to look at is how much did you actually pay for these shares? And doing that is called the cost basis. You could say adjusted cost basis. I'm not going to get into the fancy terminology of it, but just consider you made $108 out of 1,200 shares of stock. So if you take the 1,200 shares you own and you want to figure out how much lower one share would be, you just simply divide the 1,200 by the $108 that you received. Does that make sense?
Yeah. Yeah. I think so.
So by doing this tells you how much lower one share would be because you're taking the total shares, dividing by the total amount of income you received. If
Right.
you do 1,200 minus 108, you get 9 cents. Doesn't sound like a ton, but as you'll see, this is pretty important later on, especially if you stay in this position for a little while. So again, you bought your shares at 4. You reduced the share price by 9 cents per share. So if you subtract those two numbers, your actual cost basis is really $3.91, not the
Right.
full $4. Another
Right.
way you could think about it is you bought $4,400 of total money from your brokerage to buy the shares, and you subtract 108 from it, right?
Right.
So then
Yep.
you have
That
the
makes sense.
391 pretty much.
Mm-hmm.
Those 12, like 12 times 4, so it's 4,800, right? Yeah, that
Right.
was the total amount you bought, but then you collected some money in the back end.
Right.
Now, you sold a covered call at 4, which is good because your initial average cost of your shares is 4. So if the share price goes up to 4, a little bit higher than that, and you have to sell your shares at 4, the share price would be a break even. You're not going to have any capital gains or capital losses because
Right.
since you bought at 4, you sold at 4, right?
Right.
So that was a good decision that you made without really even thinking about it. You might have a
Well,
good inherent knowledge on covered calls and not realize it.
yeah, yeah. Maybe it's because I asked you because I did.
Yeah,
You
well,
said,
that's
"Hey,
good.
try
I don't
these."
know if you asked me that a few weeks ago or not.
I did. That's
Oh,
where,
okay.
yeah, I didn't come up with this. You said, "How about these ones?" I'm like, "All right, Lance, I'll do it." So I did.
Okay. Yeah. Typically, for beginners, even intermediates, some advanced people, they typically will sell a covered call at the same strike price that they got the average cost of their shares for.
Right.
Because then in that case, you don't have the capital gain, you don't have a capital loss. But the main point of that is to repair the stock if it tumbles a lot. Maybe if you could get back to that break even of the stock price, you get a little bit extra from the premiums. And to be honest, that wouldn't be a bad decision right now because if you could go from a stock that started at 12, you tried to sell it at 7.5, you ended up putting in a lot of extra money to lower it down. If you could get out of the situation on September 17th near break even, I think that would be a pretty good bonus to be honest,
If I
compared
can do that,
to
I'll be super happy. Like, yeah, if I can
yeah,
just get a break
exactly.
even. Yeah.
And one of the keys to selling covered calls is you want to sell at a strike price you're happy with. Okay.
Right.
You don't want to be selling a covered call necessarily at $3 right now. You would make a little bit more in premium, but if it goes to 350, you're taking a loss of $100 per share, right?
Right,
Or for
right.
100 shares. You lose $1 per share in that case. All right, so let's look at what might happen. And there's different situations because right now we're at 288. So let's say the stock does shoot up a bit, and let's say it goes above $4.15 or something. At that point, because you sold a covered call, and what a covered call is essentially you're selling a call at a stock that you already own the shares for. Okay. You obviously already own your 1,200 shares. You sold covered calls on about 10 of them, I think.
Right, no, okay, no.
So if it goes above 4, you have to sell those shares at 4, and then you would be broke even on the share price of the stock, but you kept that $108 from those covered call premiums. Remember, that comes in your pocket right away.
Right, but I don't have to sell at 4, right? I can hold those. If I think it's going to squeeze to 10, I can still hold the shares, right? But my covered calls would go to crap, right?
If you did not sell a covered call, then you could. But because you sold a covered call, you're pretty much making the obligation to sell those shares at 4. That's the
Right, so it's
agreement
like,
you made.
right. So I've only done it once. So this is the kind of thing I didn't realize. So with cash secured puts, you're not doing that because it's your broker's got the money already in there and everything. But by having the calls secured, right? Like you have the shares. You have to give them away, right? They're gonna
Yes.
be like when I buy to close the covered calls, those shares are gonna go. That's what you're basically saying, right? So
Yeah. Almost. You're about 90% right there. Let's say
that's a good try then.
9/17 is a Friday. On Saturday, the day after, those shares will be assigned to whoever bought these calls at $4. And
Right,
you don't know who you're going to give them to. It's a random person that happens to own that option that bought them instead of you selling them. And then
Raj.
the Monday after, you would actually lose your shares at that point.
Right.
Now,
Wow.
buying to close is a slightly different thing that you mentioned. You could buy to close those covered calls, and we're going to go over when you might want to do that in the next few slides. But we'll get to that when it happens. Let's just look at what happens in terms of your gain if the stock goes to 4, okay, or a little over 4. You made $108 from those covered call premiums. Your total money that you put up to buy your shares was $4,400. Was it? I'm sorry. Was it 1,100 or 1,200 shares you have?
So 1,100 shares.
Oh,
So you're
1,100.
about right.
Okay,
Yeah.
so the numbers are slightly off here. That should be a little bit higher than 9. It'll be 1,100 divided by 108. So that goes up a few pennies. That's good for you. But I guess these numbers should be right because you did receive $108 in covered calls and you spent $4,400 to buy your shares. Does that make sense?
Right. Yep.
All right. So if you just look at it that way, no capital gain or loss from buying and selling those shares, you would make 108 divided by the 4,400, and you would actually have a 2.4% gain on your money from the
Yeah.
initial purchase.
Right. Right. Yep.
And by the way, there's about a 26% chance right now
I'll
that the
take it.
stock will actually get to above 4. I don't know if you were aware of that one.
I
Usually
saw in your slides. Yeah. I don't like those odds so much, but all right.
better than 0, right?
Yeah. Yeah.
So
So you want here?
this is from stockoptionschannel.com that shows anyone could go to this. You don't need a brokerage, just a website. On the left, you're seeing the covered call prices. The next column is showing what the midpoint or the bid point. This is the lowest amount you'd receive. And then on the right is showing the percent chance it's going to happen. I guess it's actually about 25% chance because it says there's a 75% chance it won't get to 4. So to
Right.
figure out the odds of it to get to 4, it'd be the opposite. It'd be 100 minus the 75 or 25%, right?
Right. Right.
So you have 25, 26% chance. That's actually higher than I expected, to be honest, when I was doing this research. I thought it was going to be lower than that. But I guess a lot of option people are thinking maybe if earnings coming out, maybe the China regulations will decrease. It might shoot up again. All right. So, Russell, any questions so far? If the stock goes above 4?
Okay. So if it goes a lot above 4, what happens? Say it goes to 8. instead of 4? Like it gaps up massive on earnings
Uh-huh.
tomorrow. What's
If
my
it
situation?
gaps up to 8 instead of 4, this exact same thing happens. You would still keep your $108 because you're obligated. That means you have to sell those shares at 4 because you own the covered call.
Right.
And you would gain your 2.4%.
And
That,
that,
in a way, is considered a negative because, yes, if you didn't sell your covered call, you would have made a lot more money than not selling the covered call. But I like to think of it with the glass half full. You get a 2.4% gain on a stock that just roller coastered. So,
right. Okay, so if it doubled, I'm not going to make as much as if it didn't own. So I've really kind of capped my profits.
yes, you are right.
I've
Selling
really
covered calls is a more conservative strategy in general. You are capping your gains because if you just own the shares, you have an infinite possible gain. The stock could go to 5
right.
billion for all you know. But by doing this, you are being more conservative because you're collecting that income from selling the covered calls. And you're right, you do cap your gains.
Similarly, like you do with CSPs, right? So it doesn't
Pretty
matter if
much.
it finishes $1 or $10 off, right? Okay. So what if the opposite happens? What if this thing tanks to $2 tomorrow? Well, not even less than that, $1, say.
Let me see if I have that. Okay.
Yeah,
So if the stock goes to say $1 and goes even lower, in that case, you could buy back those covered call options that you sold, and you could buy them back a lot cheaper because the share
right,
price went down even more from 4. If the stock's
right.
at 1, no one's going to want to buy these $4 calls anymore. You could probably buy it back for a few pennies, right?
Right. So I think the calls would drop to probably, I don't know, maybe 50%, you think?
Even it
Probably.
depends. It depends on implied volatility. IV crush is what it's called after earnings. With after earnings, you're not really sure it's going to happen to stock as much, so the
Right.
volatility be a little bit lower. It could easily be 50% less or more, depending on where the stock price is.
Yeah, so Raj saying 200 shares will be free. So yeah, I do have 200 shares that are free. So that's good.
Right.
The reason I bought the calls, right, well, sold the calls in the first place was to try and protect my downside. The problem is I
Mhm.
realized it doesn't really protect my downside because if this goes to $1, I might make $50 from closing out those calls, but I'm going to lose like 3 grand in the share price or something. So, so it's really not going to help if this thing goes like
You're
really has a hard time.
you're technically right on that. However, it did help a little bit because you did receive that $108.
Right.
So I think glass half full, right?
Yeah.
Happy life, happy everything. But you're right. If the stock tanks even more, it is unfortunate. Covered calls will not necessarily help you much. That is one of
Right.
the downsides to having these high implied volatility positions in general.
Yeah.
All
Makes
right, here's
sense.
some possible strategies of what you have so far, what I've seen in your situation, and what I might do. Again, you could do what you want. You don't necessarily have to follow these, but here's some just recommendations. Leave the 9 covered calls you have right now. If the stock tanks or if the stock kind of stays at low threes and not shooting up anytime in the next few weeks, I would try to buy to close those at really cheap price, maybe $5,
Yeah.
because then you could sell a new covered call and then you go to the next month, go to October.
Yeah.
Um, one reason why you could do that is if you could do this earlier, let's say this happens in a week or so, you would get a bigger premium if you go all the way out to October because you have more time for that position to possibly shoot up again.
Yeah. Yeah.
Some people they wait until expiration. Not necessarily anything wrong with that because the stock could shoot up at any time. But typically, if you could buy it back at $5 and you made, whatever is $15, $16, it's a pretty good gain just for that initial position. We're not really focusing too much on the share price at that point. Okay. You also have 200 more shares. You could just leave them the way they are. And if the stock price shoots up, you would get some gain from that 200 shares. Absolutely nothing wrong with that. I did look into it though. And if you tomorrow sell 2 covered calls with the 200 additional shares you didn't sell a covered call with, right now, if you do the same share price at 4, it's actually paying $20. and $20 times 2 positions, you'd get $40 more in your pocket. Again, not a ton of money, but it's something.
Right. But it does cap me like even more, right? Because like if those 200 shares, if this thing rockets for whatever reason, I could make $1,000, $2,000, $3,000 just on those 200 shares. If this thing
Yeah.
shoots up $10 a day, but for $40, it's like you got to weigh the risk reward, right? Like, oh, do I really care about $40 if I'm down $1,500 on the thing as it is? So, yeah.
I
Would you be
agree.
thinking
Yeah,
about
you got to
this?
weigh the risk and reward. There's no set definitely do this type answers to these things.
Right, right. If this was you, would you be doing this longer term, like just thinking about managing this over months and months, maybe even longer, doing these kind of strategies, or like because I'm still going at it from a stock trader point of view, where I'm looking for some sort of quick exit with the shares.
Yeah.
But
For your quick exit with the shares, selling it right at 4 at your initial stock price is what I would have probably done as well, because I don't necessarily want to hold this thing, and I don't care about stocks rocketing to the moon. I just want to be receiving income from these premiums and the cash secured put side going down and the covered call side going out. And as you can see in a lot of the results we have, you can make really good returns overall just from those premiums.
yeah. Yep, sure.
By the way, let's say, remember your average share price is $4. If you make $20 on it, you're getting 5% return on your money in a month. So that's a good return to me. Sometimes you get in the spot where you might be at 1 to 2% in a month for that cover call premium. And in that case, it doesn't seem like it's really worth it much. But as we'll go over soon, it does lower cost basis, which is a pretty important aspect.
Yeah, yeah.
Any questions on this slide?
Yeah, anybody got any questions? I know Raj is saying to sell some calls tomorrow right before earnings, sell out the money. Says it's free money. I'll take free money.
It is, in a way, it's free money, but yes, you are capping your upside. You're right on both cases. You're both right, Russell and Raj. There's no right or wrong here. It's like yin and yang.
I almost wish that I'd bought some puts on this thing rather than selling calls. I feel like that probably would be the right way, but like I'm trying to learn how to do these covered calls and things.
Ball puts are decent hedges at times. I personally don't do them. I very rarely would consider it, but I know some people do those.
Yeah.
And hindsight's 2020. If you saw when it was at 12 and you bought puts, I mean, they're making tons of money.
Yeah. Yeah, exactly. So let me just get this straight. So if I was to say this thing goes up to 450 tomorrow, and I close out some of the calls, right? So I always get this mixed up because I'm used to buying stuff. So I buy to close some of these covered calls, right?
Yes.
Right. So what happens to my how many shares have I have? 1,200 shares or something?
So if the stock shoots up way past 4 the next 2 days or whatever when earnings happen, you could still buy back your covered calls that you sold. Unfortunately, it's going to be a lot more expensive than what you sold them at because the share price is above the $4 strike.
Yeah.
And it could cost a ton of money to do that.
Right.
If you really believed in the stock and you think, it's at 8 when it shot up and it's going to keep going at 15, it would be a good strategy there. But the way that I think about it is if you sell a covered call at a strike price you're happy with and it gets there, you just won. That's the whole point.
Yeah.
We're trying to get the premium. We're trying to get out of that position, especially if it's a big roller coaster, right?
Yeah. All right. So Raj is saying if you sold a put credit spread, I haven't done spreads. I don't do spreads. I probably should. Everybody seems
we'll get there in a few months, Russell. I've been doing them quite a lot the last few months.
Yeah. I know a lot of people doing them. It seems like a fantastic strategy.
You got to interview Raj on the credit spreads at some point. We're putting you on the spotlight on this. You give it a few months first.
Yeah.
There is more notes that I still have. I just wanted to unshare for a second. So let's go over cost basis.
That's a concept that I was telling Marion this, I have such a hard time with cost basis now, but I think you've explained it more clearly that I understand it a little bit better. It's not that hard a concept, but for some reason, just sitting there going, so hopefully I get it now though a lot
Right.
more.
So I am a science teacher, and I'm going to use my science teacher voice now.
Okay.
Everybody, write down the equation for cost basis is the price of your shares subtracted by the premium received. Okay, I'll stop teacher voice.
Premium
So
receipts. I'm writing that down.
all you got to do to figure out your cost basis, you take the price of the shares where you assign them, or if you bought shares at a certain price, subtract any premium received. Now, this premium received could be going on for many, many months, or possibly just 1 or 2 months, okay? Or even weeks if it's a weekly. So every time you're able to sell a covered call, let's say the stock was not really shooting up to 20, it's not going down to 1, it's hovering at the 3 mark for a while.
Right.
Let's say you're selling covered calls at that 4 strike price every month, month after month, like clockwork. You could be receiving a good amount of income from that. Again, right now it's $20, which is a 5% return in about a month. It may not necessarily be the same every month. It most likely won't be. But if you could get 4 or 5% return on your cash, I mean, people are happy with that in any type of option selling strategy as it is.
Do you
Okay?
see the banner that I just put up? I found out how to do this where you can click on a comment and it comes up on the screen. Can you read that from Jay?
I'm on my screen now. I'm sharing it. I can't see that yet.
Oh, okay. So he's asking, would doing a CSP for 917 at $2 be a good idea here?
Maybe. I don't know what the premium is. We could look it up.
Hey,
It's a
Charlene, just
possibility. Yeah. I mean, if you're already in the position doing that, you can make decent money possibly. Or if you get assigned, you would lower your cost basis even more. The reason why is your price of your shares is lower since you're selling cash secured put, say at $2 instead of the 4 where we're at. And you would receive more premium. I did this with Wish, a company that dropped quite a bit as well. The last few weeks, I was selling cash secured puts even lower than the current price. I happened to not get assigned on them, but I did receive some premium. So that is a possibility. Okay.
yeah.
All right. So let's go back to cost basis. Let's say month
Sorry.
after month, you're making $15 to $20 per position on these, right? You're making almost 5% a month. As you do this month after month, the premium received would go up. The price of your shares stayed the same $4, right? But if I take my $4 price of shares and I subtract a bigger number here, your cost basis will go down more and more every month, right?
Yeah, hold on. I just realized I'm not sharing the screen. There we go.
Oh, okay.
Full bar. All right.
So yeah, if you're receiving more premium month after month, your cost basis obviously would go down, right? Because you're subtracting by a bigger number.
Right.
Now, the goal in many cases is to get your cost basis down as much as possible. The reason
Right.
why? In general, it's less risky. Since you're bringing in money every month, you're lowering that cost basis. Let's say that stock just hovers at 3 for the next 6 months or so, right? If you keep selling those covered calls, making say $20 every month, 6 months from now, that's over $1 down in your cost basis, right? And then suddenly you could actually get out at 3 if you wanted to that next month, or you just keep selling at 4 over and over, keep collecting, 4 or 5% a month, even on a stock that's not really doing anything. Does that make sense?
Makes sense. Does indeed.
Okay, I think there's 1 or 2 more slides. I said that I think it's reasonable. I'm not guessing, I'm not a truth teller here, but I think it's reasonable. You might be able to get your cost basis down to maybe 350 or so in about 3-4 months at this point.
Mm-hmm.
So if you're able to do that and you just had enough of go-to, you want to go to out of there, bad pun, you could sell a covered call down to 350 instead of 4. And that's again, if you sold the covered call at 350, but your cost basis was also 350, then you're not gaining or losing. You're going to break even, but then you get out of your position, right?
Yeah. Yeah, makes sense.
This will pay more premium in general because the closer the strike price is to the share price, the more the premium will be, because there's a better chance that it would actually hit that price. You might be able to get out of your position faster. The only problem is no capital gains, because again, as you're lowering your cost basis more and more, if you get your cost basis down to 350 and then you sell the covered call at 350, no capital gain at that point. But that is a strategy to do if you just want to get out of the position at no gain or loss. You'd be broke even, minus maybe the last premium you receive, right?
Right.
And then
So,
I think if the stock is close to 4, let's say it's at 380, 390, if you want, let's say it expires at 380 on September 17th. Then if you want, you can sell covered calls a little higher if you want, and then you can receive some capital gains, right? So if it's at 388 in September, let's say in October, you sell a covered call at 5, and then in October it goes to $5.10. You would sell your shares at 5, then you would make $100 capital gain per 100 shares. It would be like, what, $1,100 total capital gain. You do get a little less premium by doing that, though. Okay?
right.
And those are all the slides I have. Let me stop sharing.
Yeah, I mean, I think I understand my options a little bit better now, and I think
You made a pun there.
Yeah, I think all these options is like the options with these options is like okay, but I guess like I'm a little nervous. I've capped my upside, so I have a feeling this thing might squeeze. It's just a gut feeling. It's just it's speculation. But if this thing squeezes, it's going to be kind of annoying that like I've going to cap my gains so much. So, but at this point,
keep your 200 shares, then don't do anything with the 200. At least you get some upside with that.
Right.
There's a fine balance, and also it doesn't happen to a lot of positions because many times you only do 100 shares or something. But when you have a lot of shares, feel free to only sell covered calls on a certain percent of them. Sell covered calls on half, let the gain on the other half if you want.
That's kind of what's happened. Yeah, I mean, that's what's happened by accident. I just randomly bought. It's like, you know what, I'll get a few and then I'll get a few more. And I wasn't calculating how many shares I had to cover those calls. It just happened that there's 200 left over. Like 200 shares aren't like accounted for. So, yeah. So, well, let's see what happens tomorrow. I mean, it's anybody's guess. Is anybody that's watching stuck in this thing as well? I know Raj is. But like Charlene, are you managing to escape this, or what's your? I know there's a delay between me asking and her actually answering, so we'll see.
My cats are fighting. Sorry, every time I do these videos, there's a cat fight.
It happened last time right at the start as well. So, yeah.
Wait, some of them are saying the premiums. Jay said 0.09, still 4.5%. We do 9 divided by 4. That's about 2.25%. You take the premium collected, divided by the share price. And that's how you figure out the percent that you would receive. And you don't have to do the funny times by 100 stuff. Just literally take your premium, divide by the strike price. And then it automatically gets a percent that way instead of timesing 100 and all that weird stuff.
Yeah.
I didn't take go-to either. But I'm in Wish. I'm hurt almost as much as you guys anyway. We're all hurting in a way. But luckily, a lot of the other positions are doing really well. So
this is the skill, though. This is what we need to be able to do. Because I don't know if you guys watched the David Jaffe interview, but he was really frank. He goes, "Look, guys, like 98% win rate. He still lost $400,000 in one trade, wiping out. I think he said a year or 2 years or more of gains." And this guy
took a flight, right? Like he was flying. He didn't have
he was on a flight, and it's something like, it sounds like this China thing, or it actually sounded like some sort of gamma IV nonsense or something.
Right.
But this is what I'm gonna have to learn, because it's the key, right? It's the key to being able to do this. It really is, like being able to get out of these positions when they wipe out like your other 30 wins.
It could, yes. Any beginners out there? Just an FYI, I started off selling covered calls on pretty stable blue chip stocks like AT&T, BAC, Bank of America, like high dividends, doesn't fluctuate a lot. I actually owned over 100 shares of AT&T before even considering covered calls on it, and I
Right.
just wanted to boost the dividends. So I sold covered calls like really far out of the money. It paid me a few pennies, but it was a little bit better than the dividend was. So it's that's the way I learned. And I did that for at least like 6 months before I did any of this other high IV fancy stuff.
Yeah.
And when I was doing that, I never got assigned. I also know what the risks were of getting assigned, but I already owned the shares a bit lower than it was anyway. So it's not really much of a negative in that case. Like lock in a gain, like, oh no, I better not lock in a big gain and also get paid to do it.
There's just so much finesse involved with actually making these strategies work. Like for marketing, you can go out there and be like, we make 100%, like we lose 1 out of 50 trades. But then that one just like completely negates everything unless you can deal with it. And that's what
Yes.
I think that's where having people like you and David Jaffe and these guys who like, and it's the same conversation with him at the weekend, where like you guys know how to deal with it. You've been in, I'm sure you've been in this situation where I've like at the moment, you must have been in similar situations. At least sound like you are with Wish at the moment
I'm in
as
it
well.
right now and I've been in it before. Yep. You can't let it get to you. That's another big thing too.
Oh,
Not all
Jason,
trades will work out.
can you see that now? So I've put up, I can put up people's
Yes.
comments. So
It can be
Jay's
very
saying,
daunting.
I don't find it
Especially
is. Getting
well,
assigned to me just doesn't seem that scary. Like maybe it's because I'm playing with smaller amounts, so I'm not like freaking out. Like if I get, I don't know.
yeah. If you get a sign like really close, let's say you sell a cash secured put at 10 and it goes to like 950 or something, you're only down $50. In those cases, sell a covered call at 10, it's gonna pay you a lot. Like it could pay you more than the cash secured put did. So if the stock price is close, there's nothing really worry about it, especially in these extreme cases where it's like, "Ugh," then like it could be daunting. Yes.
Raj trusts us apparently. Or
Why?
you trust
No, I'm kidding. Yeah, we talk all the time.
All right. Well, I still not completely sure what tomorrow's gonna bring, but I we'll have to see what it is this thing does. To be honest, if I can get out for a $500 loss at this point, I'll be more than happy. So um I'll
Right.
if not, I mean part of me's hoping for a huge spike, but now I realize it's capped. I'm just like, okay, well, it's not
Right.
gonna be good.
But yeah,
um,
like what I personally, if I get 2% a month in premiums from selling at the strike price, I'm pretty happy with it. I mean, if you're getting at least 2% in everything else you're doing, and then you get those 2% just waiting, it could be waiting 6 months, but 2%, it's 2% anyway. You're going to beat the S&P in the long run, getting 2% a month and even covered calls. But yeah, patience is a virtue. I've been in Rocket RKT. I got on that near the top. It was like 23.50. And that thing has been lingering at 18, 17 for months. But I don't mind. Just keep selling those covered calls. Get a 1 to 2% a month.
yeah, that's the hope. So, all right. Well, I think I've pretty much got everything sorted out. Um, any idea why this thing fell? Like, I haven't been following these crazy Chinese stocks. Let me just share my brokerage again real quick. Add the stream. No idea what I'm trying to add the stream. Full screen lit. That didn't work. Yeah, I don't know how to. Here we go. Share. Weird. Never mind. It's not sharing. Well, um, I'm happy to wrap it up there. I think I've got myself kind of an idea, a bit better idea. Hope you guys found this useful. This recording will be up on Facebook and on YouTube forever, hopefully.
Yep.
um,
Anyone that's watching this recording, if you have any questions, leave a comment in the video. Me or Russell will be free to help. Okay.
Sounds good. All right, guys, we're going to wrap it up there. So we will talk to you in the different chat rooms, in Theta Traders, in the Facebook group, and Sidekick, wherever you wherever you find yourself, except for Raj. We're not going to talk to him. So, he's outcast for leaving sidekick. So
Yeah.
it's like,
Raj and Jay, appreciate you joining as well.
all right.
All right, bye guys.
All right. Thanks, guys. We're going to end it there. Cheers.
How we going?